Hi, good afternoon, everyone. Uh, First of all, warm welcome to CedarIBSi FinTech Labs webinar on driving enterprise fraud management in AML in the digital era. I have today with me an established panel, including my colleagues Jayaprakash Kavala and Amit Sharma. Let me just quickly introduce both of the gentlemen. So a quick background to myself. I've been leading fintech practice at Cedar over the last 20 years, have been helping clients implement enterprise fraud management and AML practices. I have with me Jayaprakash today, who is the Chief Product Officer at CustomerXP, and the firm is called Clarify. It's one of the leading fintechs with enterprise fraud focus. And Jayaprakash himself have been leading product innovations, pre-sales and alliances at Clarify, helping all the clients with interesting enterprise fraud management related programs. I also have with me Amit Sharma. Amit heads global products at Infrasoft, which is one of the market leaders in AML and financial services space. Amit comes with significant number of years of experience in innovating AML and fraud management products and significant amount of experience. So let me start first introducing to you the enterprise fraud management as it's seen in today's digital era, along with the trend, and then we'll focus on to some of the very interesting case studies from practitioners' perspective for both Jayaprakash and Amit's perspective. So when you look at both enterprise fraud and AML, it's a quite interesting domains with the global fraud exceeding 51 billion by 2027 and almost growing at more than 30% CAGR. Looking at the again fraud itself, there is a 14% growth on a fraud cases, especially in COVID times. It's a significantly increased. And artificial intelligence is playing a huge role. And if you look at artificial intelligence based revenues, that's growing to 6.5 billion by last year. But very surprising to see almost 50% of the bank are not very well prepared. And either they are operating with old generation fraud, card fraud platforms, or a old AML platform, which is not real time. And again, the banks who have invested, 40% of effort close to is going towards false positive, which in net is going to be waste. So again, reducing the false positive is the right thing to do. Looking at, again, organizations on monitoring side, 72% of organizations have the exception monitoring and anomaly detected by 2021. So still in some of the parts of the world, automation is still not reached and people are dependent on post-facto fraud identification. Now, when you look at the key trends in enterprise fraud management, the industry has come a long way and we have a support of advanced analytics now. The real-time fraud identification is a key mantra, where while fraud is happening on an account or a card, if you can block it and stop it, that's going to create material impact from a bank's bottom line as well as reputation perspective. There are predictive models available where one can do predictive fraud modeling with an enterprise case management so that the cases are created and resolved with participation between business, technology, risk, compliance, all those stakeholders. Again, next generation authentication, which is more biometric driven or a speech recognition. Most banks in the Middle East is now moving to speech-based IVRs. So that's again something which we're seeing across in terms of improving their enterprise fraud. Looking at AML, this is significantly driven by central banks, and central banks have been looking at the perspective from channels and virtual currencies. As all of you know, channels have become 50 to 70% of the volumes of the bank. There are new payment banks and payment licenses being issued. Most central banks are considering virtual currencies. So all of this is going to have a material impact on AML capabilities required. Also, cognitive computing is coming in as a big trend, looking at the statistical aspects and behavioral aspect. Again, enhanced due diligence is an ask from most regulators. In fact, in MENA, most of the regulators have issued deadlines for customer due diligence on looking at CDD very effectively. Traditionally, most banks are running CDD in core banking. Now banks are considering specialist platforms to run customer workflows on onboarding. Looking at, again, linkages, it's very interesting how AML has gone beyond base AML to look at accounts, customers, transactions, and behavioral aspects. And again, real time, not a post-facto identification. Again, using of third-party utilities with KYC, eKYC authorities coming in most countries, central banks offering significantly superior blacklist and due diligence available as in OFAC and multiple other checklists. So all of these, I'm sure Amit will talk in great depth about some of the recent trends. Now, why is it that enterprise fraud and AML has become so important? So there are three things which is changing in today's industry in last 18 months. But thanks to COVID, the banking models have significantly innovated itself to a cashless kind of a payment and a cashless economy. A lot of crowdfunding, coin offerings, peer-to-peer lending, some of these new business models which has come into Asia, Middle East, and Europe have changed the need for real-time fraud management and AML. Also, the digital currencies, which is being coming. Nigeria launched currency e-Naira last week. China is already doing the pilot of digital yuan for a while. And Europe has also moved into a second stage evaluation of digital euro. So some of these digital currencies are going to create completely new avenues from a fraud perspective, from an AML perspective. So it's utmost important at this juncture to bring in analytics and predictive models, which both Jayaprakash and Amit will speak about, and complicated process and technology. As all of you know, technology hasn't kept pace, especially the dinosaur core banking systems and new generation of fraud management platforms not being available to most banks. So we're really dealing with old generation process and technology. Functions, policies, awareness is some of the big concerns which one needs to look at. Now, when you look at the fraud, traditionally enterprises have been looking at check frauds, debit card or credit card frauds, wire transfers, and ATM frauds. Again, parallels have moved in a big way to looking at synthetic identities, stolen identities, and many of these areas of account takeovers. Again, thanks to COVID, a lot of charity and fraudulent scams going on, fake fines. So the whole amount of fraud use cases have so significantly expanded that today there are huge opportunities from a fraud perspective. And again, each of these opportunities needs to be blocked by your enterprise fraud platform. Again, all of this is not going to be possible until and unless it's not only solution. You need to look at the collaboration and coordination aspect from an enterprise perspective, build a culture where people are open to self-assessment, benchmarking, an ethical culture where passwords and any kind of identity information is not shared, and there is a proper periodic monitoring to look at some of the data analytics and looking forward. Again, a very interesting case from an Indian market, one of the payments bank, which was having a huge amount of account opening happening per month, was looking at a fraud detection platform. They implemented a FinTech, BI rule and AI platform, improving the account detection rates, reducing the false positive, creating a right impact on the enterprise, and having a dashboard for CROs and fraud team to ensure that they can real time monitor and observe. The whole solution was implemented within 6 months. And if you see the outcomes, it clearly mind boggling. 1.7 million customers transactions screened, 400 plus branch and 200,000 banking points. Again, all of them reviewed with a seamless integration to banks technology. So that's a classic enterprise fraud rollout use case. Looking at anti-money laundering, again, the new age complex financial instruments creates a huge opportunity for placement in terms of large fund transfers broken into multiple parts, transporting cash cross border, and buying precious goods. So multiple opportunities. Now, when you look at layering, which talks about sorting the funds from the origin, looking at multiple interbank transfers, looking at multiple structured deposits. Again, there's a huge effort Indian government has done on shell companies and shutting them down, but globally is still a major issue in markets like MENA, Africa. And again, the integration with foreign banks, front companies, property dealings. So all of these provides a huge number of opportunities from an anti-money laundering perspective for screening. Now, one of the key asks from regulators have been automated customer due diligence. And many banks in the region are onto a 12 to 18-month program to improve significantly the automation on their customer due diligence platforms, eliminating the manual errors and ease of use software. Again, looking at enhanced customer engagement, improving the efficiency from an account opening perspective, as well as bringing end-to-end tools. I think it's a time now to look at the first poll question, and let me read out the question to you. Which of the following is the most important enterprise fraud management in digital era? And I would ask each one of you to take a minute to vote for it. And again, customer onboarding is a first option, real-time transaction monitoring is the second, cross-channel capabilities, or behavior analytics to looking at the behaviors from an enterprise fraud perspective, and the process and policies, moving to a next generation process and policies. So I'll just take a minute to see people are voting. I think it's a large amount of votes I can see coming through. Let's give them 10 more seconds. Okay, so we have quite a bit of response. Oh, very, very interesting result. Let me publish it. So as you can see, largest is behavior analytics, followed by real-time transaction monitoring. So no surprises. Those are the two advanced analytics aspects which JP will speak about. And moving further, to invite my fellow speaker. Again, the case study, which is very interesting, which I'm sure JP will cover it as part of the automated CDD solution in his part. So let me invite my colleague, JP.
Thank you, Chetan. Very good afternoon to all of you. It's happy to be here interacting with all of you. I see this community of people who are in this webinar as superheroes who are fighting against the evil. Now, let me take you through some of our experiences of how we see the enterprise fraud management emerging, what are the challenges that the banks are facing, and how we have been able to help banks overcome these challenges by demonstrating some of the case studies. So Chetan has already introduced myself. I'm a Chief Product Officer at Clarify. I've been working with Clarify for the past 11 years. I'll talk about the fraud detection mechanisms in the enterprise fraud management. Chetan has already introduced the concepts to you, so I'll not spend too much time here. But the crux is the banks need to have the capability to intervene in a transaction real time as and when the transactions are happening across all the channels, whether it's physical or digital, whether it's core banking systems, online banking, your cards, ATMs, e-commerce transactions. The ultimate holy grail of EFM is this ability to intervene in every transaction that's happening across channels, across products. I mean, that's the key crux. So moving forward, I'll quickly touch upon the typical AFM fraud typologies across various channels and products. Traditionally, banks have deployed siloed solutions which are meant to tackle fraud at a specific channel level. For example, banks have been deploying debit card fraud solutions or credit card fraud solution or internet banking fraud only solutions. But the key aspect of enterprise fraud management is the ability of the system or the technology to look at a customer across all the channels on his activities are happening in the branches, activities happening on the online channels, whether it's internet banking, mobile banking, or the payments or the remittances, etc., and assess the risk of each transaction in the context of what is happening for this customer historically across all these channels. From that point of view, we just listed some of the typical typologies that you would be seeing as banks across various channels. From the core banking perspective, you would see a lot of these accounts which are operating as mule accounts, and they will be operating across channels. If you look at advance fee fraud as a scheme or a lottery fraud as a scheme, one of the key victims of the bank customer actually would be because of the mule account scheme, right? So how would you identify a mule account? A customer who's coming in and opening an account, and then he would not know how the money is coming in, how the money is going out, because he has been operated by some other person and he will be taking away money out, right? So those are the kind of complex schemes which can be really interjected by using a technology like this, right? So moving on, from a digital point of view, though transactions and the activities have been getting monitored, the looking after the devices or the user behavior across the devices is critical from enterprise fraud management point of view. From now on, I'll talk about 5 key aspects of enterprise fraud management, and I'll talk about the challenges around these aspects and how the banks can actually overcome these challenges. The first one, the topmost, is having a unified financial crime management system at an institutional level. We already talked about cross-channel, cross-product. We have seen the regulators are increasingly recommending a common platform for effective fraud detection and prevention. Regulators are drawing lines between the fraud proceeds as well as the money laundering proceeds. And that's been happening across the markets and something that we have seen across the markets, whether it's advanced markets or emerging markets. We're also seeing emerging digital products are exposing some of the lacunae that is available for the fraudsters to actually penetrate deeper into the ecosystem of the banks in order to penetrate frauds. Now, what banks need in this context is a unified platform with a power of real-time detection as well as the power of real-time compliance checks. Right? With this approach, banks can focus on maintaining a single system, thereby reducing the overall TCO for both the hardware as well as the software. Right? This also enables the system to have a single interface with all these source systems, whether it's your core banking systems, online banking systems, ATM cards, etc. Integration is one of the biggest challenges in deployment of these kind of solutions. Now, if you can actually simplify this by having a unified interface, using which you get the data once, but you apply the intelligence using multiple use cases or multiple types of behavior analytics. That way, it will be a lot more cost efficient for the banks in order to fight this menace. So I'd like to demonstrate this by taking you through a quick case study. This is a large bank in India with over 40 million customers. They have leveraged this model of fighting both fraud and AML compliance challenges using a single solution. For this, the bank also has won the Silent Model Bank Award. Moving forward, I'll talk about some of the details of this case study. So like I said, this is a bank with over 40 million customers. Over 5,000 branch users use the solution. Over 100 centralized investigation users across fraud monitoring as well as compliance use the solution. Over 250 different fraud typologies or scenarios are deployed in this bank, and the average transaction per second is again around 250, and the peaks can go up to 500 transactions per second. If you look at the way this bank has approached, they have integrated every transaction processing system in a bank across both retail as well as corporate portfolio into this platform, right? From the core banking systems to cards to internet banking to mobile banking to consumer finance to trade finance, the Swift payment remittances, etc. And the system is also being used for real-time AML capabilities. Right? And not only that, while the bank is looking at this system from a risk point of view, the bank has actually extended the solution to use it on a positive side to use the same intelligence, the customer intelligence that is derived real time by the platform for cross-sell and upsell in order to generate revenues for the bank. So this is the case study that I want to bring to your notice. With the deployment of this system, within the first 1 year itself, the bank has saved over 2 million US dollars because of the fraud losses saved by the alerts as well as the transactions stopped by the system. Moving forward, this particular case study also demonstrates the variety of the systems that are required to be integrated with the platform, with the enterprise financial crime management platform, in order for the bank to get the maximum benefits out of the platform. If you look at the bank systems, not only your regular transaction systems, but you would see some of very interesting sources also being integrated. For example, deliverables, right? Every time a checkbook is sent or every time a pin mailer is sent, the data around the fact that this particular courier has been delivered to this customer on this particular day on this time is also coming into the fraud management system. What can the fraud management system do with that? That's a very valuable data, because once you have a checkbook going out within 24 hours, a checkbook from the same checkbook, one out of sequence check comes from a very large amount, that could be a possible courier fraud. Right? That could be somebody intervening into the whole process and trying to take away the money. Right? So these are some of the kind of interesting use cases that this bank has deployed beyond the typical core banking, online banking, digital fraud prevention use cases. If you look at the whole cycle, right from the customer onboarding stage to the transaction origination to the transaction fulfillment, every point is being evaluated for the risk of fraud as well as AML by the system. And this is a system that's been running for a number of years, and banks keep upgrading the system with advanced capabilities of Clarify over the years. Moving forward, I will move on to the second point that I wanted to highlight, that the known pattern-based scenarios as well as machine learning need to work in conjunction for the system like this to be effective. We have seen in our experience that pure play rule-based systems, simple rule-based systems, as well as the other extreme, the pure play machine learning, both are tough to implement from a false positive management point of view as well as from a detection point of view. Both the artificial intelligence and the human intelligence have to work together for the bank to be efficient in this effort. So the bank's business teams are also finding it difficult to operationalize some of the pure machine learning models because of the explainability problems. Even the regulators have been demanding explainability in the models as well as scenarios that the banks have been deploying in order to validate their fraud management as well as the AML efforts. So in this context, a single hybrid platform to power both known pattern-based scenarios as well as the machine learning is very vital for the banks when they are looking out for a platform like this. This also needs to have the machine learning applied on the investigation also, because at the end of the day, a system can give you alerts, a system can give you early warning signals, but the users or the compliance users or the fraud monitoring users have to complete the investigation and resolutions, the outcome of that also need to be fed back into the engine, and the engine or the system should be intelligent enough to take that input and then appropriately improve the detection mechanisms. So in this context, I would like to talk about another case study. This is a large bank based in UAE. It's a bank. It's a marquee bank. It's a very tech-savvy bank that's used these capabilities of hybrid detection in order to fight fraud. This is a bank with over 2 million accounts, over 30 branches. The products and services covered include retail banking, corporate banking, treasury and capital markets, investment banking, asset management, international banking. Again, over 15 systems, right from the core banking systems, the online banking, online mobile apps, your mobile apps for the corporate businesses, internet banking applications for both retail as well as corporates, remittances, IVRS, switches, you name it, any transaction processing system that the bank is using is integrated with Clarify for real-time fraud monitoring. Not only that, the bank has extended the deployment of Clarify beyond the traditional scenario-based or the pattern-based techniques into the machine learning approach. What we have done there is to deploy supervised machine learning models using the master data attributes of the customers and accounts as well as the transactional history in order to build behavioral profiling attributes. Using the behavioral profiling attributes, we assess the probability of each alert being a false positive and showcase that in the case management system itself when the alert is coming with a red, amber and green, whether this particular alert is actually likely to be a false positive at all. Now with this approach, the bank has seen tremendous improvements in their investigation efforts. Earlier, they were made to investigate over 86 alerts to find one fraud. With this approach, now they are able to reduce that to just 8 alerts to be investigated per fraud. This has led to reduction of 90% false positives, and we are looking forward to extend this further to lot many use cases in the same bank in the coming months and years. Moving forward, I'll talk about the third key aspect around the EFM or the enterprise fraud management, which is the real-time decisions. Now, if you look at the traditional fraud management systems, if you have to do fraud detection at an internet banking level or a card transaction level, the transactions per second that the system needs to look at maybe 10, 20, 30, 40, maximum 100. But when you are looking at enterprise fraud management, the enterprise fraud management system is looking at transactions which is a accumulation of the transactions happening across all channels, including core banking systems. And the ability of the system to process these transactions at scale and yet give the real-time decisions by considering all the historical behavioral profiles of the customers and accounts is really a complex thing. And that's what is the crux of the enterprise fraud management. Many banks have been finding it really difficult to scale their legacy systems in order to cover the enterprise-wide scale, and these systems are really not geared or architected for this kind of real-time decisions. So in this context, banks need to look out for these key capabilities which provide these real-time decisions at scale in order to allow, decline or challenge every transaction that's happening by considering the historical behavioral profiling of each entity, whether it's a customer, account or user or branch, etc. Right? A transaction may have multiple entities. When a transaction is coming in, the profiling of each entity needs to be considered in order to arrive at the final decision whether to allow, decline or challenge the transactions. And this needs to happen within sub-second response time. And this we have done by deploying it. One of the largest banks, super large bank. It's a bank with 210 million accounts. It's size of Brazil, right? One of the large countries, right? So we have deployed real-time decision where every transaction in core banking is waiting for Clarify to give a response whether to allow or decline a transaction. Moving forward, we'll talk about some of the details of this case study. Like I said, this is 210 million accounts, over 10,000 branches, 180 million customers. Average transactions per second is 450. The peak goes up to 2000. Again, here we've integrated with all the key transaction processing systems, including core banking, internet banking, mobile, phone banking, ATM, IVR, e-commerce, POS, e-wallets, remittances, etc. But the key headline summary is the ability to intervene in every transaction happening in core banking at 2000 transactions per second. Right? And that's something that we have proven. This is something, one capability that banks really need in the digital era. If you look at the India example with the rise of UPI, the number of transactions suddenly have spurted. And with the digital, with the launch of new payment schemes, it is really imperative for the banks across various other regions to start looking out for this kind of capabilities. Moving forward, I will talk about the fourth aspect, which is the case management and the investigations. As we all know, false positives is a key problem. You need to have systems which are geared to reduce false positives, not only at the detection level, even in the case management process level, right? You have seen the banks spending millions and millions of money in the investigations. There are banks who have hundreds of investigators looking at the alerts across fraud and AML. If you look at the super large banks in Europe and US, and that's where the banks need to have the capability to do individual customer behavioral profile driven engines to detect these activities, and the case management system needs to have the bells and whistles to give the feedback to the engine. For example, suppression is one such feature where the investigator can tell the system to suppress a particular type of alerts for a particular type of account for the next, say, 180 days or 100 days, etc. So these kind of features are really required for the case management system to be effective. Again, we'd like to talk about one case study moving forward with an example of how we have done this one bank. This is another bank. It's a large bank with over 120 million accounts. In fact, this is a bank that has merged with another bank and it's become now a super large bank with over 200 million accounts. Over 7,000 branches. We have done integrations with core banking, internet banking, mobile banking, and debit cards. We have used a risk-based approach and behavioral profiling as a focal point for reducing the number of alerts. As a continuation of the implementation, we also deployed machine learning models which actually use the data available within the system to reduce the false positives. Deploying of the machine learning models led to 60% reduction in the false positives in this bank, and thus 60% reduction in the alert investigations. Moving forward, the last aspect I want to quickly cover in the next 1 or 2 minutes is banks are spending huge amount of effort, money, and the internal IT efforts in deploying a platform like this, which integrates with multiple source systems within a bank and is generating customer intelligence at a massive scale. It's high time the bank start using this particular capability across other use cases. The example, the customer engagement. The example I gave you when I talked about the first case study, the bank was actually using the same system to power the cross-sell offers through the campaign management system that the bank is using. The same system can also be used for loan early warning signals. Bad loans is a problem. Can you use the internal and external data available for the customer to give you early warning alerts about a loan before it starts becoming NPA? So these are the kind of use cases that the banks can leverage with a platform like this. So I'll stop here, but I'd like to quickly talk about maybe 1 minute about who we are as Clarify. We are a Bangalore-based software product company with over 15 years in existence. We have deployed Clarify over 18 countries. Over 650 million accounts are being monitored real time using our platform today. We have got global acclaim for Clarify. Some of the many leading analysts, including Chattis, Cyber Intelligence, recognized for our capabilities. for the real-time fraud prevention and cross-channel capabilities. And we'll be happy to connect with all of you further and take these discussions forward. Thank you very much, Chetan, and thank you all for joining.
Thanks, JP. Thanks. Very interesting perspective. It's time for our second poll now. And again, it's an interesting question in enterprise fraud area, where what is the key challenge in implementing the enterprise fraud platform? And the options include project prioritization, a management support and buying, availability of a use cases and scenarios for library, or a budget allocation for such a large initiative, or a real-time integration with core payment and surround systems. And let's wait for 30 seconds. But JP, just to understand from your perspective, when you speak to clients on the challenges, it'll be very interesting to understand, do you agree with the poll outcome or you have a different view? I'll just give a minute more. We have already 40 odd responses compiled, and people are still voting. So I'll just give them 30 seconds more, maybe. Yeah, so I think we've got the good poll. Let me share and results. So again, no surprises. Everybody has gone for real time. Almost 66% voters have believed that integrating real time to core payments and surround system is the single largest challenge. And JP, would you agree?
I absolutely I agree. This is the single biggest challenge in the FM adoption for the banks. There are vendors who would come and give the product and leave the integration challenges to the banks, and that's that's really where the banks face the challenge, and that's where people like us help banks in actually integrate with
Excellent.
the core
Thanks,
systems.
JP. Thanks for your time and very interesting case studies. And I'll now hereby invite Amit to give his perspective. As I explained, Amit has a significant number of years of experience around AML in the digital era. So, Amit, over to you.
Good afternoon, everyone. First of all, thanks to CedarIBSi FinTech Lab for having me here. And thank you, everyone, for joining today. I'll be taking a few slides on AML in digital area, key challenges, some of the technology offering from Infosoft. And lastly, I'll touch upon the profile as well. So we can't really talk about trends today without talking about the pandemic. And I'm sure the pandemic has produced a number of key trends in the area of compliance as well. One of the trends which every organization and every consumer is feeling now without a doubt is acceleration of digitalization. I would say we have been experiencing this from quite some time, and now moving forward, so we have been into lockdowns and social distancing. COVID-19 has pressed the fast forward button in this entire process. This is a hard transition, unlikely to reverse even when the life is back to normal after the pandemic. In a way, digital first is a trend now, and fundamentally, it has changed the way the company transacts with the buyers, sellers, and their vendors. Majority of transactions are now digital, and this trend is not moving backwards. Therefore, physical documents are no longer available for easy verification to the compliance teams mostly, and they must rely on technology for most of due diligence part. In the time of when elegance and frictionless digital experience is strategic imperative, compliance has become even more challenging. Moving forward, these are some of the highlights which might surprise you. 90% of the global money laundering activities go undetected each year. 48% banks have outdated technology to meet AML compliance requirements effectively. 31% of illicit flow of funds is blocked every year through suspicious activity reports. 41% of organization has too many false positive screening results. And many times this has caused problems to good customers as well. And there are some industry facts available here which might interest all fintechs. The global AML software market is expected to reach USD 1,700 million US by 2023 with a CAGR of 15.2%. And this number will continue to grow year on year. Moving forward, so these are the some of the key challenges for AML. One of this increased regulatory compliance. Globally, financial institutions are facing ever-changing regulatory requirements that must be complied within the limited turnaround time, such as a GoML, FATCA, AMLD, GRC, virtual currency monitoring. This is a rapid increase. There is a rapid increase in virtual currencies transactions. Most of the regulators and institutions are finding it very, very difficult to monitor such activities due to lack of traceability of these currencies and lack of identities as well in some of the cases. High false positive. This is another challenge for institutions. Number of false alerts generated by monitoring systems. The reason could be data quality, rules overlapping, and there are threshold defined in the system, which needs to be monitored all the time. Adverse media check. It is difficult to monitor customers' activity outside the banking transactional patterns. However, these days it's important for institutions to monitor these activities. This follow them and to correct and take a right business decisions. Risk profiling. This is the area where the banks are working globally. People are adopting a dynamic risk assessment where you need to continue to monitor your customer risk and should adapt by financial institutions, allowing them to analyze customer profile and their transactional activity in their business environment. Data mapping. Data is provided to the system dictates the quality of monitoring results. However, in the most financial institutions, they find it very difficult to bridge the data gap between required and what is necessary to run base for AI and machine learning technologies. So these are the couple of challenges. Moving forward, Infrasoft has been pioneer in providing cutting-edge technology to its client globally. UniVS AMS solution is built on a new age flexible architecture to integrate new channels. It helps to monitor all transactions across traditional and new digital channels platforms such as the internet banking, mobile banking, SWIFT, third-party applications, virtual currency platform, digital wallets, social media integrations, etc. Our UniVS RegTech platform uses a AI-based technology to ensure that results are met accurately by reducing human error. It uses advanced machine learning algorithms that analyze millions of accounts and identify hidden patterns, which are very, very difficult to identify with the naked eyes. Solution generates alerts notifying users for any anomaly in the transactional behavior, which is beyond the customer transactional profile, and that may lead to money laundering activities. The solution also converts highly probable alerts to case and categorize into the bucket of STR reporting. Therefore, it increases the productivity and operational efficiency. With the use of machine learning, system self-learns from the final status of the given alerts, and that increases the accuracy of the predictions. We use real-time AI, power-based document verification techniques, OCR-enabled image data extraction, facial matching, machine learning-based fraud filters to automate and expedite the KYC verification process. Our efforts to automate AML KYC have been recognized in the form of numerous awards globally. Moving forward. So these are the couple of key differentiators from Infosoft. We have a significant presence worldwide with over 250 implementations on AML across 50 FIU's jurisdictions. It is an end-to-end integrated compliance monitoring under one product, UniVS, which is a enterprise fraud risk management, AML, governance and risk compliance, FATCA, CRS reporting, and Go AML reporting. It is completely multi-country, multi-entity, multilingual capabilities available on premises, on cloud, as a SaaS, as a service as well. We have integrated more than 40 core banking solutions and ready-made connectors available with most of the core banking and legacy platforms. So there are lesser efforts are required for implementation and go live. So there has been a best practice adopted by us. We have been able to roll out projects within weeks instead of months. Solution is benchmarked to monitor over 28 billion transactions yearly. So this is sort of a, I would say, achievement for a company who's based out from subcontinent, who's monitoring such huge number of transactions almost yearly basis in more than 55 countries. We're also helping central governments in a couple of countries for designing and developing compliance and reporting platform on national levels. Our Universe platform meets unique industry-specific needs of banking, NBFCs, insurance companies, brokerage house, free zone, etc. Moving forward. So I'll speak on company profile. Infosoftware is one of the leading digital technology solution provider in 55 countries. We have around more than 500 banks as our customers globally, and we have more than 1,400 employees across 11 countries, though we work in 58 countries along with the partners and direct sales. Kia is our AI-based omnichannel digital platform. We offer mobile banking, UPI, payment switch, bots, and blockchain-based trade finance on this platform. We have partnered in India around with the 8 PSU banks in India with a customer base of 340 million. We managed close to 4.5 billion transactions on UPI switches, which is close to 18% of national traffic in India on our switches. Like I said, Universe is our RegTech platform. This is our flagship product. We are helping central banks, central agencies to keep the surveillance on banking system and financial system to keep the world safer. We offer anti-money laundering and AML and FedCa CRS on this platform. It has been globally ranked #1 by IBS Sales League as well. And we have a sizable market share in subcontinents, Middle East and Africa. And we intend to increase our footprint by every year. Finaro is our core banking platform. We have more than 300 banks globally on the platform, under which we also offer end-to-end digital lending platform, which is right from lead generation, loan origination, management part of, and collection part of it. So this is it. This is all, young people from my side. Thank you so much. And we look forward to see you in person.
Amit, thanks for a very interesting presentation on the AML, and quite interesting to see the size. Quite impressed with what you and the Infrasoft team has achieved. I think it's time now for a few questions, and I can clearly see a lot of audience questions. Let me just take him up. So very interesting question from Nitin. He's asking, what are the top 3 use case in terms of processes in enterprise fraud management? So JP, you want to take this one?
Sure. So I think I understood the question as 3 use cases, and I say is
top 3
areas,
use cases.
top 3 areas where enterprise fraud management or the business areas of the process. I think the number 1 is the digital transactions at this moment, right? The customers have been doing transactions online, on mobile and apps through fintechs. Transactions are actually hitting the banks through the third-party apps. The fintechs, unified payments have become a reality in multiple countries. So that's number 1. Number 2 is actually internal fraud. What we've seen, a study from ACF says that over 60% or 65% of the cases, fraud cases, there's at least one internal person involved or colluded in the whole process, whether it's a data leakage, whether it's the person actually involved with the fraudsters in doing the transactions through his accounts, etc. So the number 2 is internal. The third one, I would say, is the payments, right? The cards and payments, right? So these are top 3 use cases, and each one of them have to be looked at holistically in conjunction with the customer behavior across other channels on what this customer is doing in branches, in internet banking, in e-commerce sites, etc. So in a way, actually all these are interlinked, but from a bank's point of view, these are the top three processes that we see as useful.
Very interesting. So next question, Amit, is for you. And I think the person has not stated his name, but is asking, is digitization the primary reason for the transition to enterprise fraud and AML? And what has changed in the AML due to digitization?
See, I would say, customer identity has become a far more important than any time later, because what we see when we interact with the risk officer and globally when we talk to them, the important factor is only clean customers can give you clean business. So it's a far more important for you to understand who are your customers, what business they are into, who are their customers, what business they are into, what sort of transition they're doing. So it's a sort of a dynamic analysis all the time, and you need to understand where the velocity of transactions are coming. So I would say the digitalization is not only the cost, but of course it has increased the volume of velocity of the transaction of the system, which has caused a bit of distress to the system, where people have to see not many alerts what it used to be, and they have to take decisions quickly. You have to, it's a age of digital era where people like to have a customer service on a swap of buttons. So people wants to have those transactions done without any difficulties. So customer service is important. Their reputation is also important. So this is what it is. So we have to balance it out. You have to improve, innovate technology to give the right result in terms of alerts and to handle frauds as well.
Interesting. Very interesting. Next question is from Snehal. And again, the question is to JPU, that what kind of machine learning models are deployed in the banks? And if you can cite few examples, I think you covered few in case studies.
Sure.
But specifically in machine learning, if you can answer which are the models.
Sure. So in machine learning, we use a combination of both supervised as well as unsupervised learning techniques. Of course, supervised techniques we will use where the bank has got a good benchmark or historical data or label data of transactions which are marked as fraud and not fraud. Once you have the data, the other data about the customer, the account, and all the transactions is used to build a behavioral profile, and then we apply techniques like random forest, decision trees, or neural networks to look at likely fraud score of a new incoming transaction coming in for a particular customer. Right, so that's one approach when you have a data. Now the challenge really is a lot of banks would not have this benchmark data when they start on this journey, right? That's where the unsupervised learning techniques will come into the picture. Using the unsupervised learning techniques, you can look at the behavioral profiling of the existing customers and their accounts and try to identify if there is an anomaly in a transaction pattern. That's what we call as anomaly detection, right? Let me just give an example, right? If you have an internet banking fraud scenario, it says that if number of transactions in an hour for a particular account is beyond 3, and the cumulative amount of the three transactions is beyond, say, 1000 AED, then you stop the transaction or get an alert. This is a scenario based transaction. Now if you have to infuse machine learning or anomaly detection into this pattern, right, you can look at segmenting or clustering your whole customer data or the account data and segment the customer portfolio into probably 6 or 7 segments, and you can have segment specific behavior coming in from the data, and then you can have segment specific thresholds put in the scenario saying, hey, this particular customer is belonging to a segment called senior citizens, retired, who do minimal number of digital transactions, and then for them the threshold could be actually lower. Whereas you have young, digitally savvy, and newly employed customer who's doing a lot of digital transactions, for him your thresholds could be higher, right? So that's how you actually can infuse the whole machine learning, unsupervised machine learning into the real-time detection. So these are some of the examples that I'd like to give.
Very interesting. Very interesting. So it's time for our last poll. Again, an interesting one, which is questioning about the best in most relevant concerns from an AML perspective. And do banks see in digital era, digital or cryptocurrency, or an online gaming apps, or an e-commerce transactions of Amazon's, or an e-cash transaction, which is significantly higher volume now, right? So I'll just give a minute for people to vote. And I see almost, yeah, 60 plus people voting. So let's give them a 30 seconds more. Amit, any guesses on what would you see as an AML perspective the most or the biggest concern for the banks and financial institutions who are your customers?
Well, so I would say e-commerce and e-transactions, online banking should be a higher percentage.
I think you aren't off. Almost 39% of the participants believe e-cash and e-commerce are the largest concerns for the banks right now,
Yeah.
and followed by digital transactions and cryptocurrency.
Yeah.
And online gaming is a very, very small,
Very small
percentage. So very interesting. So thanks, gentlemen. I think it was an amazing discussion, and I learned a lot myself on enterprise fraud as well as AML practices in the digital era. And I think it's a time. Thanks, everyone.